Good day, traders. The 4-step method to high-performance trading is a free course download for increasing your confidence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high-performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Trader Stacey Burke from Stacey Burke Trading. Today we're going to be talking about the 3-day cycle trading setups that I focus on, the parabolic opportunity. This is one type of best trading setup that I hunt for each week, and they occur on Wednesday or Friday. You've often heard me use the phrase free cash Wednesday, free cash Friday, because it's a specific type of setup based on the day count: Monday, Tuesday, Wednesday, day 1, day 2, day 3, and then resetting, heading into the closing range of the week: Wednesday, Thursday, Friday, day 1, day 2, day 3. Parabolic trade setups offer an opportunity for an explosive range expansion profit target. We'll talk about that specifically today, how to measure those, how to hunt those. In the other two previous videos, we've talked about levels, timings, behavior of price. They're all in the folder. Everything you need is in this folder on the playlist. Today we'll review all those concepts, but we're specifically talking about Wednesday and Friday opportunities, how to have a basket of instruments, regardless of the session that you're trading, whether it's Asia, London, or New York. 99% of my trades are in New York. I look for opportunities in the Asian session on those days for a parabolic either trend trade on day 3, blowing off in the direction of the trend for a range expansion opportunity, or perhaps a reversal trade opportunity, whether that's on Friday or Wednesday. Now, you've heard me use the phrase the closing range of the week, which is Friday. So as we head into the close of a week, that will often set the tone heading into a new week. Now, we've talked about 3-day trading setups, and we've talked about 3 days of breakout traders, but for the purposes of this video specifically, we'll be talking about Wednesdays and Fridays, which, again, just to review, repeat this: Monday, Tuesday, Wednesday, day 1, day 2, day 3, opening range, initial balance, looking for a parabolic opportunity for an explosive move, which can be a target of a range, 100% range expansion, or a reversal opportunity. If we have day 1, day 2, maybe we're at the high of a week, low of a week for a day 3 parabolic reversal trade. Now, in the playbook, we talk about the two types of templates that I'm looking for. We can get a day 1, a day 2, a day 3, day 1, day 2, day 3, a pump and dump template, or we can have the opposite. We can go day 1, day 2, day 3 for a dump and pump template, which is the reversal at the end of the week. There are different types of variations of these depending on the calendar and what we have scheduled for major red news, and also the session that you're trading. So some sessions may not have any major red news, Asia, London, or we may have major red news on the day. We may have a Monday, Tuesday, Wednesday dump and pump template that reverses and continues day 1, day 2, day 3 into the end of the week. The overall underlying thesis behind a parabolic move is that we get a market that establishes a high and a low and a consolidation for a explosive parabolic opportunity, whether that's in Asia, London, or New York. Monday is our opening range. We talk about this in the playbook. After Tuesday, we have our initial balance. That's our 2 initial time frames. In an ideal situation, we will have a peak formation high, a peak formation low, and a consolidation heading into our day 3. We can have Asia, London, New York blowing off in the direction of the trend. Now, often the opportunity will give us a target for a range expansion, a 100% expansion of this high-low Monday, Tuesday, whether that's for a long trade or a short trade. We'll look at the way to measure that, but coming back to classical charting principles, which I have repeatedly encouraged traders to read Schabacker's book, to read Edwards and McGee, study Peter Brandt. Peter Brandt is a 40-plus year veteran of classical charting principles, but the same concepts apply when we get a coiled up market for an explosive move. These rectangles, which price will always, as you've heard me say in the past, is always in a box. And that box is what builds up the potential trade opportunity on a day 3, a Wednesday, or a Friday in this particular type of trading edge setup. Now, just to reinforce, there are 2 types of opportunities: the pump and dump opportunity or the dump and pump opportunity. We can get that over 3 days. We can get that over the course of the week. One of the problems that traders have is that they stick to 1 or 2 markets and they're trying to catch moves and scalp pips, and then they miss the larger explosive move that builds over 2 or 3 days. And as you've heard me also say in the past, one high quality parabolic setup that presents in a week is worth 10 times trying to catch pips and zigzags and little moves and swings on short time frames. So understanding that the larger template builds over a longer time frame. So when we get these parabolic opportunities that in some cases will not come back, whether it's a Thursday, a Friday, a Wednesday, when we have a 3-day trading setup or 3 days of breakout traders in the market, these opportunities are ones that can be scaled into with size and held on to depending on the day count, the template, the economic calendar, etc. But understanding the parabolic opportunity that builds from a coil, day 1, day 2, day 3, gives traders the edge that can be traded and sized into on the day itself, whether that's on the front side of a move, and you've heard me use that expression, front side, back side, whether it's a pump and dump template or whether it's a dump and pump template. Often traders are getting caught on the escalator on a day 3, and they'll hold on for a large move, but it may just be a session trade. We may get an inside day. We can get a larger template that builds over the course of the 5 days for the dump and pump opportunity or the pump and dump opportunity. So again, the escalator up, front side, and back side, these are different types of variations. So traders will often say, well, there was no trade on a Wednesday, or didn't occur in my session. And as I reinforce, as Billy Lipschutz says, if traders were willing to sit on their hands 50% of the time, they would make a lot more money. These time frame traders, other time frame traders over the course of the week, 4-hour, daily, 1 hour, and you're potentially entering into a market on a 1-minute or a 5-minute chart in the timing window, those are the opportunities where traders have significant risk reward for range expansion targets where we can get 100, 200% expansions of the range on the day. So often traders will trade every single day trying to catch moves or make money every day, and they miss the larger understanding of the bigger template that can build day 1, day 2, day 3. Wednesday's the midpoint range of the week, and I reset the count day 1, day 2, day 3. So the power of this is that it reproduces every single week. Monday, Tuesday, Wednesday, Thursday, Friday. The timing window is exactly the same. Asia, London, New York. And then we have different variations. Do we get them every single week? If you have a basket large enough, you will get parabolic opportunities every single week. And even if you only had one quality trade out of this edge of setup, this type of opportunity, one of these is worth 10 or more of the other ones. I will look to size into these opportunities that have built over the template over 3 days. When you understand the larger template, you'll understand then the 3-day setups, because they can meld from 1 week into the next in the same type of template. And we'll review that. We'll talk about range expansions today, the other timing windows. If you go back and review the other videos, I cover that in detail. But the power of the 3-day parabolic is an exceptional opportunity when traders understand how to identify them, how to step back, and then the levels, the high, the low of the day, and the closing price levels. So in the playbook, page 19, we talk about the different types of opportunities, but the big picture of the pump and dump templates Monday to Friday, and the dump and pump template. Same type of situation over the course of 5 days. Again, for the purposes of this video specifically, we will focus on Wednesdays and Fridays, because Wednesdays and Fridays, if you hunt out these opportunities, are there every single week. Now, I want to paint a bit of a bigger picture, understanding also that we have a daily chart up, and the black dotted lines are the beginnings of new months. And as we can see directional changes almost on a regular basis as a new month occurs, as you've heard me talk about a new timing cycle. And we'll talk in a future video about using the daily chart and looking at closing price of the month. But the big picture I want to paint with the understanding here is how that when we get a new month, new timing cycle, we have a new template, the same as we do each week and the same as we do each day, which is why we have the opportunities to have a specific trading setup that I am hunting for, and when those parabolic opportunities present, how they can be identified on the day. So several traders, they struggle with the process of trying to find an instrument, and we're going to just look at the major pairs. But when you understand we have a new month, then we have week 1, week 2, week 3, but we also within that have day 1, day 2, day 3, Monday, Tuesday, Wednesday, and a day 1, day 2, day 3 heading into the closing range of the week, Wednesday, Thursday, Friday. And that's important because then you understand that there's potentially either going to be a frontside parabolic for a trend trade or potentially a backside parabolic opportunity for either a trend trade or a reversal trade on Wednesday or Friday, which are day 3s in the Monday to Wednesday, Wednesday to Friday templates. We just started a new month, and this was a fairly heavy week for major red news, particularly in the U.S. session. This is Forex Factory calendar. You can go back and back test some of your opportunities by going back and identifying in your testing which days had major red news. And obviously traders that have been following me long enough know how I approach the news. But if you're new to this, just focusing on the larger template and being aware when there is major red news in your session, and I will not be in the market until after the news is released. And we've talked about that. I don't put any risk into the market ahead of major red news. My main focus is 9:30 New York time. There are opportunities around that, major red news, momentum catalyst opportunities. But for the purposes of this video, again, we're looking at targeting sessions and days where there is no major red news or not being in the market until after that news is released. Now we'll look at some different examples, but for this particular, again, the Wednesday, Friday, we'll look at this week in particular. This was a week where we had the Fed on a Wednesday, non-farm payrolls on Friday, and a new month. And as I've mentioned before, the non-farm payrolls and a Fed week, we can have a different type of template, but we can stand back and look at this over the course of the week and see clearly that we have a pump and dump template. We just talked about the changes that can occur in a market's direction with a new timing cycle, a new month. But I want to talk more about understanding the big picture. This is an hourly chart. Now, we talked about the opening range Monday and Tuesday. Once Tuesday prints, we have our initial balance. That forms our high and low when we're hunting out a best trade candidate for a day 3, Wednesday or Friday parabolic opportunity. Now, the lines that are on here, the dotted blue line is the high of the day and the low of the day, and the green line is the closing price of that day heading into the new day. So we talk about a parabolic opportunity on Wednesday. We have the Fed, and this is typical of a Fed week where we will see a larger template evolve over the course of the week, and traders again will trade on the front side of a market and sometimes not make it to the end of the week because they get chopped up on a day 2, which I will refer specifically for this video as a Tuesday and a Wednesday, a Tuesday and a Thursday, and we're targeting Wednesday or Friday parabolic opportunities. Now, I talked about the idea of targeting on a day 3. If we get a parabolic trade, the idea is that we're targeting a range expansion opportunity, a range expansion of a high-low or a low-high box. In some cases, it will be closing price. and a level, a high of day or low of day level that forms our consolidation in day 3 and targeting 100 or 200% range expansions of that move. Again, go review Peter Brandt, Classical Charting, Schabacker, Edwards and McGee. This is from the original text, 1930s. This is nothing new, but this is the approach I'm looking for that gives me a scalable opportunity. Now, with our Fed week, day 1, day 2, day 3, no parabolic opportunity built in our box, and we'll talk specifically about what that should look like. Now, you've heard me use the phrase day 0. So we can have parabolic trend trades or reversal trades. Day 0 setup, the 3-day coil that builds heading into a Wednesday or a Friday in this particular case for a day 3 trading opportunity, a parabolic 3-session setup on day 3. Now, sometimes because of the economic calendar, some of these moves will blow off or move, as we see with payrolls, an explosive move. So we look for that parabolic range expansion on day 3. We're still inside on our Wednesday. We don't have a coil, but you've also heard me use the phrase, are they working the high or are they working the low? If Monday is our opening range, we have a high and low that's set in the new week. Friday is our closing range of the week. So sometimes Friday will be an inside day. We had that on the NASDAQ this week. But Friday, in this particular case, forms our high of the week and our low heading into our new week. That is our closing range of the week. So I want to reinforce, a lot of traders are reading the material. They're hearing me say this, but I think you're missing the big picture concept of the importance of understanding the closing range, the opening range of the week. Monday in this particular case was an inside day. We know in the playbook that inside day is a potential signal day identifier. The inside day for false break, trend trades, low-hanging fruit, and reversal opportunities. We make a higher high on our Tuesday, which forms our initial balance, and we also trigger breakout traders into the market. That becomes our new high of the week up top. Now, this is an example of where traders who were patient and waited and wanted to trade the Fed. I don't trade the Fed, but again, the market, they move the market at the end of the day on day 3 on the Fed. And we now have our first red day. First red day, page 58 in the playbook. And this is where it's important. Day 3 now. So we have our day 3, no parabolic opportunity within the 3 sessions until later after the Fed. Again, we see the lower low on the inside, which begins the pump before the dump within the day itself for the collapse and our first red day. But now let's talk about range expansions. We have our high and low of Wednesday, which did not break down until later on the Fed, but we have day 1, day 2, day 3. We can now take that as our geometry, our box, heading into the closing range of the week, day 1, day 2, day 3. So now understanding that, we can see where traders will be able to identify other opportunities on the backside. So we have front side, day 1, day 2, day 3, backside, with other session trading opportunities, whether that's on the Thursday, but heading into our free cash Friday for a parabolic opportunity, we already have a market that has broken down. We're now in a market that is in a range expansion. And the important part of this is to understand when to not be counter-trending markets. As I repeat, traders sometimes will be looking to buy something down low or sell something up high when they're in a market that is in a range expansion. Now, obviously, we had non-farm payrolls, but if we come to our U.S. session on Friday with that understanding and potentially identifying a first bounce or a trading opportunity in the U.S. session after the payrolls release, traders may have had an opportunity even for a trade that would complete the move after major red news. Now, we had non-farm payrolls. This is a 5-minute chart. We're looking at Friday, the Friday after non-farm payrolls release. We also had ISM at 10 a.m. New York time. So when we have a U.S. session on day 3 on a Friday after non-farm payrolls, this is an example of where traders may have positioned themselves after the news, prior to the New York Open, 40 minutes. This is 40 minutes after, I repeat this repeatedly, major red news, New York Open, 30 to 45 minutes after a major release, we can see an opportunity present for either a continuation or a reversal opportunity. Now, ISM Services was released at 10 a.m. We saw an explosive reversal. Again, counter-trending the larger pump and dump template driven by other time frame traders, where we see the 50 pip move later after the 3-hour window, 1 hour, 2 hour, 3 hours, completing an easy 50 pip move down to our 200% expansion of the range. So a market that is trending strongly. So an example of not trying to counter trend, a market that is in a range expansion heading towards the second full expansion. Major red news, huge movers, especially non-farm payrolls on a Friday in a trending market, an example of a trending market. And we'll look at the pound yen, same week. But I also just want to repeat to traders, go back and watch the most recent previous videos in this playlist. I talk specifically about timings, levels, behavior of price. So before, if you're new to this or you jump ahead and you're saying, yeah, but where's this, where's that? Go and study the other videos. It's very detailed. And it shows specifically why I focus on these levels, what setups I'm looking for. And in this video, we're talking about the parabolic opportunity either on a Wednesday or a Friday for a day 3 trading setup. Now, this is a variation over the course of a week. Just giving an example, we have our opening range. Go back and talk about our Friday closing range. So when we head into our new week, we have a market that breaks the low of Friday, our closing range of the week. If we come back, we'll also notice that is the low of the week. And we're still inside of our box, day 1. Day 2 breaks out. We have a large pump day on day 2. And we're inside on our Wednesday. So we've already had our large move on a Tuesday. So that's, and we'll come back and look at this. Obviously, we've talked about 3-day trading setups. This is an example of a Friday, Monday, Tuesday, but no parabolic coil. We had the parabolic move on Tuesday. But heading into our week now, we reset. Wednesday is our midpoint range of the week. We have our high of the week. And we have our Wednesday forming our midpoint range of the week. Similar to our Monday, Tuesday, Wednesday, we now have a Wednesday, Thursday, Friday opportunity. Day 1, day 2, day 3. The dump and pump template. We have a market that closes higher on Friday. Thursday's closes higher than the one on Wednesday, but Friday, as we head into our session, we have a first green day opportunity. First green day on page 64. This is why it's important to be stepping back and hunting out the best setups over a basket of instrument. You'll see the same type of template Friday, Monday, Tuesday. So I know traders have repeatedly said to me they find it too confusing, but for the purposes of this video, again, we're talking about Wednesday and Friday. That makes it simple. But the same type of dump and pump template occurred on our Friday, Monday, Tuesday. And I used the same process of the 100% range expansion as an opportunity, depending on the session that you're trading. In this particular case, on the Tuesday, we had a 200% expansion of the range on the day 3 for this trade opportunity. Traders in London, Asia, London had the opportunity to either continue with that expansion, and in the US, we're at the end of that move, understanding where that can fail if you are trading the low-hanging fruit continuation trade. Low-hanging fruit, page 96. So understanding, I'm going to keep repeating some basic core concepts. This is an hourly chart where I'm looking for the larger template opportunity that will present. Now, the other concept I want you to grasp is at the end of a week, when Friday's our closing range, if there's a parabolic opportunity, then that is potentially a market that can stay going until the close of the session, especially at the beginning of a new month. When we see that timing cycle kick in and a new potential either reversal or trending opportunity heading into our longer time frame daily cycle. So we have our template, we have a first green day, but we also have a template that's formed prior to our session, our US session, that is targeting back towards the high of the week if that presents in the session. Just before we go to the smaller time frame, I just want to repeat this as well. Repetition is the mother of all learning. On a day 3, if I have a parabolic opportunity, I'm looking for a range expansion as a potential profit target. Remember, I'm in a consolidated market, a rectangle, a larger rectangle at the bottom of the box. I'm looking for that parabolic range expansion as the trade setup opportunity. So reinforcing, waiting till after the release of payrolls and 5-minute chart, but we have our profit target 100% range expansion and a new hour beginning, so understanding the importance of time rotation. Managing your risk. We have a 1-bar stop, whether we enter in on the break of the bear candle, whether we enter in on the engulfment candle. This no more than 15 to 20 pips max risk, but we're targeting 75 to 100. So we have a 5-to-1 opportunity. Understanding the range expansion on a day 3 as a potential profit target over a 3-day dump and pump template. So the front side of the market continues, midpoint range of the week is a trend continuation template on a Friday, day 3, non-farm payrolls Friday. I want to look at the pound Canadian, and I'm trying to present some different types of templates that can show up, but the 3-day templates will always be there. And this is an opportunity that occurred in the London session on Friday, but also we had Fed on Wednesday, FOMC, but just walking back through the simple process. Fridays are closing range of the week. Monday is an inside day, heading into our new Monday, Tuesday, Wednesday potential parabolic trading opportunity. So we have our initial balance. Monday forms our low, Tuesday forms our high. Monday's an inside day, so we understand again in the playbook, we talk about the inside day, the importance of it, to recognize potentially a trap, false break type of opportunity depending on where it presents in the week. Now, being a Monday, Friday closing range is the important level for us to establish and understand that is our high of the week also, heading into our new week and a new month. But we have day 1, day 2, higher high, and then a parabolic opportunity in the heading into our U.S. window, and that market does not break out. So we talked about targeting parabolic opportunities on a day 3, but we're in the U.S. session. We come off of closing price at the end of London. This market just completes and fails at the end of the day into our the low of day in our New York window. An example of potentially a session trade, and this is a Fed day. But we reset heading into our day 1, day 2, day 3 template, heading into the closing range of the week. Now, Wednesday made a higher high. Thursday made a higher high. And we talk about this in the playbook, 3 days of breakout traders in the market. Just going to highlight these and show you as we head into our Friday template. We're focusing on Wednesday, Friday, but this is an example of day 3 breakout traders in the market in our New York session for a parabolic short trade after the news New York window, targeting the low of the week, our new current week. So we have 3 days of breakout traders in the market. We have our break in structure, that the break of a daily low, the pump and dump template for a trade setup opportunity on our day 2 Thursday, heading into our closing range of the week. Higher highs in a market that has now dumped down from the high of the week to the low of the week, heading into our non-farm payrolls free cash Friday, day 3 potential trading parabolic opportunity. On our day 3, heading into our London window, we have what Peter Brandt calls a pattern within a pattern, a small rectangle on the day itself. So an example of where you've heard me say a well-engineered daily template. We have well-engineered 3-day templates, weekly templates for pump and dump and pumps. But I also hunt for well-engineered daily templates. So we have our low of the week, which is also now the low of our new month, day 1, day 2, day 3, Wednesday, Thursday, Friday, heading into our closing range of the week. We'll zoom out here in a second. The point I'm making is to understand that on the day 3, the Friday or the Wednesday, I'm always hunting out a template for an ideal best trade candidate. Now, if we zoom in on here, we can talk about, again, the consolidation, the rectangle, a well-engineered chart at the low of our week. We don't even have to talk about numbers, just the levels. I talk about the low of day, the high of day, the closing price as areas that I will look for a trading setup off of or from. Now, we've come out of a consolidated parabolic rectangle opportunity heading into our U.S. session window. We have non-farm payrolls. Now, the target is the high of the week. This is an example of where we already are at the bottom of the week. So we don't have a consolidated high-low rate for range expansion. We have a smaller rectangle that we can identify as a potential box. The price is always in a box, targeting a potential range expansion of that rectangle, or again, the high of the week, and trailing that as we see fit. Now, how do we know what this is going to do? We don't. We have a thesis. But as we head into our session, we're already coiled inside of our universal EMA, and I want to talk about that because if you understand the longer time frame, we don't need to have a whole bunch of stuff on our chart. We already know the longer time frame is set up for the trade. So we use this as a guide to remove the subjectiveness of that situation for traders that have got the playbook to have a universal entry criteria that's visible to the eye. So we have non-farm payrolls. This is a 5-minute chart. The market is continuing to confirm our thesis. This is an example of where the market is already in a parabolic breakout, and I would be willing to position myself on a first bar trade. A 5-minute chart. This is a pound cross, potentially non-reactive. We'll always get some movement based on the US dollar cross rates on a non-farm payrolls, but positioning myself after the news release for that momentum carry through on not only the range expansion possibility from our rectangle on the day, but targeting the high of the week and a range expansion beyond that. And most stop hunts, as we've talked about in the playbook, are 25 to 50 pips outside of the range. And we can just strictly look at the numbers and follow this 25 to 50 pips as a potential area to exit this trade on a non-farm payrolls Friday, coming out of a larger 3-day template, a dump and pump opportunity for a coiled parabolic move. Traders in London had the opportunity to position themselves early in the trade, maybe take profits or re-enter after the news, or hold on to that if they saw fit. In some cases, if you're following a U.S. cross, they could have pinned the low, stop traders out before reversing and heading in that direction. Now, I'm quite content to sit and wait till after the news. I don't put any capital at risk in the markets prior to non-farm payrolls release or any other major Fed, etc. Because the opportunity is still there, zero stress, zero emotion to re-enter this market with a 1-bar stop with a measured move target or high or low of the week, 25 to 50 pips outside of the range on Free Cash Friday, our day 3. Now we'll look at the NASDAQ. You can look at the other indexes. We'll look at oil and we'll look at gold. And for the purpose of this video, we'll call it there. But you can do your homework and understand, again, the closing range of the week, heading into a new week and a new month, the new timing cycle. We have high of day, low of day closing price levels. We have an inside day on Friday. Inside day on Friday, we use Thursday as our level. We can project closing price across. It's basically the high of the day on our Thursday. And because Friday was an inside day, Thursday's range is our closing range heading into our new week. Now, we'll zoom in a bit here. Monday, we break Friday's high. And so we talked about the inside day as potential false break, trending continuation, etc. But Friday also closed as a first green day, closing above the open. So Monday, we have breakout traders in the market on our Monday. Tuesday, we have breakout traders in the market. We come to Wednesday, and again, the thesis is potentially that we have a market that is coiling for a parabolic opportunity, if indeed it presents, which is why we put our levels on here. We have a market that's coiled sideways, the beginning of a new month, day 3, but also we have what's potentially forming now as a ascending triangle. So I posted a picture of this on the community page mentioning to traders that this is a day 3 template, a dump and pump template on day 3. There are several of these in archived that I've shown before, but this is a day 3 well-engineered daily template for a parabolic opportunity in the New York session. So I know there are traders who trade the indexes in Asia and London. My main focus is 9:30 New York time, outstanding if there's 10 a.m. or 9:40 at 5 a.m. news, red news. But 9:30 New York time is when I will look to participate in an opportunity such as this. So we have two types of opportunities that can present over this week. We have the day 3 range expansion possibility. So I'm targeting potentially a move in the direction of the trend. Breakout traders are already in the market. Day 1 longs, day 2 longs. This is potentially now a day 3, as Paul Tudor Jones says. If a market is giving you an indication of a possible range expansion, don't try to fight that. Go with the direction of that move. So, two types of trades: trend trades, reversal trades. But we also now have to be thinking new timing cycle, new month. This is an ascending triangle. We may now have a market that is potentially going to be going on a range expansion of a larger geometrical structure. An ascending triangle for a potential maybe 100, 200% range expansion opportunity, depending on how price behaves. Day 1, day 2, day 3, reset, day 1, day 2, day 3. So when we come to our Wednesday, we had ADP non-farm employment, and at 10 a.m. New York time, we had ISM manufacturing. So two sets of major red news again in the U.S. window. So traders had the opportunity to potentially be in this market for an existing long trade for 50 pips after the release of non-farm ADP, exiting that move and re-entering pin hammer, 5-minute chart, after the 10 a.m. news release for a continuation of 50, 75 pips, again, zero stress in a coiled parabolic market on day 3 for the range expansion. Now, this market, we could have been targeting the 100% range expansion. This was the Fed day where we had Fed release later on where they completed that range expansion. An understanding that it is a Fed day, when we get this large engulfment candle and the retest to be either locking in profits, following it up with a trailing stop, or just exiting as we approach these levels. So there's 50, 75 pips of zero stress, zero heat in a parabolic move that consolidates and starts to auction sideways. So when we have this retest of that high after the large engulfment candle, even falling above this level is an opportunity to exit with a very handsome profit on day 3, parabolic range expansion in the NASDAQ after major red news, zero heat, 1-bar stops, managing our risk and asymmetrical risk reward on a parabolic Wednesday trading opportunity. I want to just step back and look at the larger template now. We're in a market that is now in a range expansion coming out of a geometrical classical charting structure, an ascending triangle. We're heading into Friday, our day 3. We talked about Wednesday being our midpoint range of the week. And we're now in a larger range expansion. The reason why I want to emphasize this, and we can just even follow a micro trend line up, we've cleared out the highs of a previous week. So we've taken out the high of the previous week. So understanding the difference between coming and looking and identifying a dump and pump opportunity, which we had coming from our previous Wednesday, Tuesday's high, Wednesday, Thursday, Friday, the consolidation sideways at the low of the week, the low of the new month. Coiled markets build explosive moves, day 1, day 2, day 3, whether they're patterns within patterns at the low of the week, the high of the week, that sort of scenario. But I want you to grasp the concept of an explosive move coming out of consolidation. We're in a market that is now in a range expansion, coiling sideways before we head into our non-farm payrolls Friday. So we now have cleared 100% expansion of the range, potentially now targeting a second full expansion of the range, but understanding that this is not potentially going to be at all worth trying to look for a reversal opportunity until maybe into the new week. We're in a market that is now in a range expansion. We haven't failed at a breakout of a weekly high or a daily high, we have a market that is coiled sideways on top of the weekly high that we've broken through. We're in the middle of potentially a second full range expansion from our larger geometrical structure, day 1, day 2, day 3. Now we're heading into our non-farm payrolls Friday, and we could potentially be targeting not only the second full range expansion, but maybe even the high of the previous week. Now we're on our non-farm payrolls Friday, and I want to reinforce understanding that I'm not doing anything until after the news release. I'm not predicting. I'm not forecasting. I'm not doing anything. I'm just sitting on my hands. So for the hindsight haters, understand I'm not even doing anything. I'm just waiting. I'm sitting here waiting. I have a larger template in place, and I'm waiting for the release of non-farm payrolls. We have a trend continuation first bounce. This is a 5-minute chart just prior to our New York Open. Now, if we waited for 9:30, this market has gone vertical, and we're now heading in. We're vertical, forced to chase the move. They've gone through the 200% expansion, which is 3 on the chart. But this is the second full expansion of our larger rectangle, but we also have 10 a.m. major red news release in the U.S. session. An example of where I've said before, in this particular case, I will often use 10 a.m. as my new opening time because obviously 9:30, if there is no opportunity, if there was, I would be out before the 10 a.m. news. But the 10 a.m. news release essentially tells me that once that news is released, I can go about my business and resume the normal thesis if it's still an opportunity in place. Now, we could be targeting a second full expansion of the range, but this is an example of a market DNC. We're on Friday, day 3. We've already had our news momentum catalyst. Non-farm payrolls released. The market has continued to move higher through the second full expansion. Coiled sideways, the coil sideways for 30 to 45 minutes after the news release, as we talked about in the playbook, for the continuation trade back through the high of the day, the high of the week. In this example, traders can position themselves anywhere in this coil. We have a 1-bar stop. So a break of this bear candle high is a max stop loss right here, continuing with our existing strongly trending market for easy continuation move, zero stress, zero heat. New hour begins. So 10 a.m., 30 to 45 minutes, they lock in the low. New hour begins, pin hammer on top of our low bear, coiled inside of our universal EMA for the continuation trade. And this particular trade, even entering in on the pin hammer, gave traders an easy, stress-free, low-hanging fruit 80 pip continuation, even if they entered in on the pin hammer in the new hour. It's a 1-bar stop. A 1-bar stop. Why is that? Because this market should now explode back through the high. We're coiled sideways. This is a 5-minute chart, part of a larger time frame thesis. But this consolidation, this coil is the explosive energy to continue that move. 80 pips, stress-free, not trying to counter trend a longer time frame opportunity that's come out of a larger geometrical ascending triangle structural pattern on the NASDAQ. We'll look at West Texas. Process. Friday is our closing range of the week. Monday breaks out of the low of Friday, our closing range of the week. We have shorts, day 1 shorts in the market, day 2 shorts in the market, heading into looking for our parabolic opportunity. But on Wednesday, we are inside. We are inside of our range. We don't have a coiled market. We had a coiled market on day 2 that broke down. So remember, large explosive moves will come out of a 2-day coil, day 1, day 2, or a day 3 trend continuation trade. So remember, day 3 can blow off in the direction of the trend. Front side, back side, all that sort of scenario. But timings, levels, behavior of price. We have a market that went vertical out of a smaller pattern within a pattern in the London session. So we have a market that's gone vertical in London, and we're inside still of our Tuesday's range. Day 1, day 2, and we're on Wednesday, day 3. I often will look at oil on days where there's major red news on Wednesday and Friday because oil may not react like other instruments to U.S. major red news. But we have this market. We're on day 3. We've traded up to the high of Tuesday's range as our U.S. session open begins. Our second hour goes vertical into the high of day before they engulf that upper structure. So we have our first hour making a higher high, second hour opens and engulfs before breaking down through that large bullpen hammer. So this is an example where we have 1 hour, 2 hours, a break in structure, and a third hour retest of that upper level. We've already broken the high of Tuesday. We've coiled sideways. We have a lower low. Now this just required a bit of patience for traders to sit on their hands and wait for that last hour to break down and pump back up. The new hour begins. So remember, we're looking at an hourly template. Think when you're in these positions, I'm not so focused on little bars and zigzags and trying to figure everything out. I want to know high day, low day, closing price, and then when a new hour is going to start or when an hour is ending, do I have behavior of price confirming my opportunity? We have the breakdown, which is the setup on the inside for a pump and dump within the day itself. They pump it back up at the end of the 3-hour window, 1 hour, 2 hours, a third hour push back up into the high of the day before breaking back inside of our universal EMA, coiling for the collapse back down to the low of the day. So these are really important to understand that it's a day 3. We already have shorts in the market. It's being driven by other time frame traders. They've pulled it back up into that level before collapsing back down for the easy, no stress, short trade, high of day to low of day opportunity on day 3. Back up for 1 second. Heading into our Friday, I repeat, Wednesday is the midpoint range of the week. The same as Friday is our closing range of the week. Wednesday is our midpoint range of the week, and we are essentially in a trading range heading into our Free Cash Friday, our parabolic opportunity on a Free Cash Friday. Now, we made a lower low on Thursday, but essentially we're inside of Wednesday's range, the midpoint range of the week. Oil gave an absolutely beautiful gift, which is our lower low on the inside. They've traded down through the low of the Asian session in the London gap time. That lower low on the inside is the setup for the pump and dump heading into our New York window. So we're sitting on our hands waiting because with oil, as I talk about the New York Open, if we have an opportunity prior to that, which we did at the beginning of our second hour, we already have our engulfment of the upper structure. We have a micro M heading into the beginning of our second hour. 30 to 45 minutes first hour, locking in the high. Our micro M structure at the beginning of the new hour. We now have a market that has just given us an absolutely perfect opportunity gift heading into our second hour New York Open. Vertical collapse for over 100 pips, stress-free, zero heat, before pulling back, breaking lower, pulling back, breaking lower. And for traders who were willing to sit on their hands and hold this the entire session, a high of day, low of week trading opportunity in oil, which gave well over 200 pips, zero stress, zero heat on Free Cash Friday. Tremendous opportunity, but understanding the larger 3-day template, the timings, the behavior of price, and the patience to sit on your hands and let a 3-session template set up on day 3, especially on a Friday. We'll take a look at gold and just going back to the simple process. Closing range of the week is our Friday. We had a vertical move on Friday, and that establishes our closing range of the week. Closing range of the week. And Monday was an inside day. So another example of where we can use Monday as an important signal day. It's an inside day at the beginning of our week and our opening range for the new week. We pin up to the high of the inside day on Tuesday, our day 2, bear pin hammer that gave the short trade collapse heading into our Wednesday. Now, we got the large move on our day 2 and our day 3 where we're looking for the parabolic opportunity for a potential range expansion merely trades a little bit lower, but it comes back into breakout traders for the short trade later in the session. Now, we'll talk about this because this is an example of a day 3 low-hanging fruit session trade. So instead of us getting a range expansion, you'll notice that our range, our high-low range, is up here, and we're trading down at the bottom, but we have our levels. The breakout level low of day becomes a new potential level. So you've heard me repeat this. Levels, levels, levels. I use closing price, high and low of day as my areas for getting into trades. Now, low-hanging fruit, we're already in a range expansion. I'm already in a move that's come off of a larger time frame level. I'm just re-entering that existing move. But in this particular case, we have 3 specific levels, and you've heard me mention that on a day 3, closing price can often be 50% of the range. So what I will do is take the level, we've broken the low of day level, take this level, the high and the closing price, and match my 50% level to that as a potential area where this market may fail or trade to. Now, in this case, the market actually went lower. So I always just go back to that is our levels, but I will leave the 50% level there, and I'll show you why. Because this 50% level where closing prices can be important when we come to our New York Open timing window. So we had the opportunity here, we'll go back in a moment and review this, but heading into our closing range, our non-farm payrolls, we now have a market that has come down from the high of the week on Tuesday, giving a session parabolic short trade after the news on Wednesday. So the importance of understanding timings. I'm just sitting here waiting, sitting on my hands until after the news is released because the market shows us its hand. So if you're patient, that pays. Thursday is another inside day, but it is also heading into our Free Cash Friday closes as a first green day. First green day is a day that closes above the opening price. Now, coming back just to mention this, we have a 3-day setup. Tuesday is the high of our week. Wednesday is the low. Day 1, day 2. Inside day, we don't change the day count. So several traders have said, oh, you just start the day count again. No, it's a signal day. Day 1, day 2. Friday is day 3. Now that's a 3-day template that occurs over 4 days. Dump for a potential first green day pump. Now we had again 2 sets of red news on Wednesday. These are our levels. We're in a market that's broken down. We're looking for that continuation low-hanging fruit opportunity. The 50% level that I mentioned with closing price gave traders a long opportunity in our New York Open for a vertical move up to that level. So we have price, a long entry coming off of closing price that gave traders 50 pips, but we had 10 a.m. major red news where we got our large engulfment first bar opportunity that traps volume up top for the parabolic collapse down to the low of the day, the low of the week in a day 2 well-engineered template. 3 levels of rise, 3 sessions of rise for the dump. Now this was a day 3 Wednesday trade opportunity, but a session trade as opposed to an all-in parabolic opportunity driven by other time frame traders. We're at the low of the week. We have Fed later in the day, which again began our reversal heading back. But we had an opportunity from the high of day after major red news level, which was our breakout level from the previous day. So breakout pullback, continuation. We're on our day 3 that gave traders, depending on where they got in, if they sold the original engulfment, over 100 pip move, 150 pip collapse to the low of the day. 1 bar stop. If they entered inside of the coil, the same process applies. Consolidation, a 1 bar stop. You've heard me say no more than max 20 pips because a parabolic move should continue very quickly in the direction of the trade thesis. So we had our first green day. We also had the larger dump and pump template coiling sideways first green day opportunity potentially going back up, maybe even to the high of the week, but definitely to go back to where the money was. The money was the profitable traders from Tuesday's short trade. This is the hourly chart again. Now, before non-farm payrolls, same process applies. We have an opportunity that this market could explode and go back to the high of the previous month, but we also have a market that could just do a range expansion. Gold, obviously, is as you know, if you follow long enough, typically tends to give first bar, first bounce opportunities based on the larger time frame template. It has a lot of movement and a lot of momentum. We're on day 3. Our thesis is potentially that this market could go back up and explode in that direction. Now, we had that opportunity. We had a first bar opportunity. First bar is on a news momentum catalyst. Now, this is important to understand on a payrolls. This is a vertical move. And with gold, we talk about, especially with gold, the 4 types of first minute news candles. I'm not going to talk about that right now, but there are specific behaviors that can occur in the first minute. But this market gave traders fantastic opportunity for a first bar opportunity that gave well over 50 pips very quickly. Now, this market, when we completed a full range expansion, this is a 100% range expansion, I repeat, 45 minutes after the news was released, we had the engulfment at 100% expansion of the range that gave traders 50 pips back into the first bar trade. So first bar, which moved up 75 pips from the closing price. This market closed in the area of 65 roughly with their fill. This is a 1-minute chart again, and continued to move up as high as 37. So 75 pips, zero stress, zero heat, completing the 100% expansion, but also engulfing on a 1 push, 2 push, 3 push pattern at the high and breaking down. And you'll notice that space that's been left up top in a market that's going to continue. This market would have expanded beyond the range, potentially pulled back and continued for a second full range expansion. So this was a low risk opportunity for a reversal, which went coiled sideways and rated just prior to the New York Open, went vertical back into that closing price level. New York Open again gave traders a parabolic move, 75 pips coming off the break of the high of the day. So we've broken out, pulled back, and they've continued up into the shorts. An explosive opportunity. My thesis with this market is I'll take first trade and second trade. The second trade I thought had a potential to collapse and do a measured move on the downside. So we've got a vertical move that's pumped up and potentially going to break down. When we headed into the New York session and this engulfment occurred, it just closed the trade out immediately. As we now know, New York Open can come right back up and hunt the shorts. But point being, we have a range expansion, completed 100% expansion of that range on our first green day trading opportunity. And then for traders who continue to trade later, this is just a red flag understanding. We've already completed a measured move. We had major red news at 10 a.m. It's Friday. We've stayed on top of the breakout level. So traders are still trying to trade this later. This market is just now heading into consolidation into the end of the week, into our Friday. So they've made their explosive move, gone back to get the money, 100% expansion of the range. We've come back and got longs who were in the market on that first bar trade. Done, just walk away, leave it. This market is not carrying through. It hasn't collapsed down. If this market's going to collapse down, it will break the low. And as I mentioned, this is 50%. So it needed to break through that closing price level to target the low of the day. We didn't get that. The New York Open stop hunted back up, and they protected the high of day. They've coiled sideways on top of that high of day. We have a higher high on the inside. We may have a dump and pump template heading into the new week. This is our closing range of the week. Don't know. We'll find out when we get there. As I mentioned, everything you need is in this playlist. I'll be adding this video into the playlist. Go through your templates, but understand the patience of stepping back, sitting on your hands, and just waiting, letting the larger time frame set up. If you're trading a session trade, the difference between a session trade versus an all-in 3-day setup. on Wednesdays or Fridays for parabolic, either trend trades or reversal trades. And it may just be a session trade opportunity, as we saw in gold. But everything is in here in these videos, the timings, the levels, the understanding of the different setups, the power of number levels, 100 pip boxes. Everything is in here. But master these setups. These are different than just trying to catch moves. Parabolic opportunities on Wednesdays and Fridays can significantly compound your trading account very fast. Minimal risk, zero stress, zero emotion. Day 1, day 2, day 3, Wednesdays and Fridays. Hence the term Free Cash Wednesday, Free Cash Friday. And guess what? They happen every week, Wednesday and Friday. So keep it simple, traders. Master your craft. These trade setups are hugely important. They are significantly the largest portion of my trading account. They're the ones that compound your account very, very fast. Have a great weekend. Enjoy your day, and may the markets go with you.